Today we're talking about different loan types. Lots of different ways you can buy a home. Of course, cash. If you have cash, you can buy it pretty quick. But if you don't have all that cash to be able to do it and you need finance, you're looking for monthly payments, there's a lot of different options. Each one is specific for whatever your needs are. First off, chattel loans. Now, if you already have land, or maybe you have family land, or you're leasing a property, or you have a park that you want to put the home into, chattel loans is what you're looking for. It's a home-only loan. It does not tie into the land. Nothing about it does that. It is only the home. It is still a movable piece of property at that point. Of course, when they bring it and they deliver it, they level it and set it and all of that and take the wheels off, but the way the loan is set up is it's not tied into the land. All that means is if they have to repossess the home, then they do not touch the land. The land is not involved in the loan at all when it is a chattel loan. Now, another type of loan, it is called a conventional loan or a conventional land home loan. Land home package, different ways to look at it. Now, there's two different ways that can work. If you need land, then we can help you find the land, include it all into a bundled deal. Any land improvements like clearing the trees or putting a septic tank or electric lines, water lines, anything like that, that can all be included into the loan as well as the purchase of the property. And it's usually just like chattel, a 23-year note for any loan like that. And then, of course, the other side of a conventional land home package, if you are already owning home or owning land, that is, and you don't really have a down payment, or you can use your land to cover that down payment. Obviously, both of those type of loans, they're going to be doing any appraisal on the property to make sure it's actually worth what you're paying for or worth what they're giving you to cover the down payment for. And then there is the government-backed loans. There's a lot of different style for these. And a lot of people think that just because it's a manufactured modular home that they don't qualify for these type of loans. That is not true. I do these type of loans all the time. What I'm referring to is FHA, rural development, USDA, and VA loans. Now, each one's a little bit different, but they're all pretty similar. You're gonna have to have at least a 640 credit score to be able to qualify for any of those loans. Interest rates are going to be extremely low. Now, the tricky thing with these loans, it has to have land tied into it. Whether you already own the land or you're purchasing land to put the home on, you are required to tie the land in with the home. But you get the incredibly low interest rate with each one of those. FHA, as far as down payment goes, FHA, you're looking at about 3.5% down payment, and then rural development, USDA, VA, you could be looking at 0% down payment. Now, depending on how you structure the loan, you could be looking at some closing costs, you could be looking at some construction costs, different things like that, but that's very specific for each individual loan. Talk to your salesman about how you can work that out. Sometimes you can actually include it into the loan, so at the end of the day, you pay nothing at the end when it's all said and done. Now, these loans, there is a lot of stuff that goes along with it. Obviously, for any of the loans, you're gonna want a pad. In the state of Louisiana, it's required. In a lot of states, it's required. You have to have a pad to put the home on. FHA, rural development, USDA, and VA requires concrete runners. Now, some of them also require the barrier wall to go around the outside, but it's required to have concrete for the house to be sitting on. Any of the loans you're gonna want, whether it's a sewage line or a septic tank, you're also gonna want water lines or a well, electric, stuff like that. Some other things that the FHA, rural development, USDA, VA loans require is going to be things like a driveway. It is going to be required to have in the loan. It is going to be required to have different inspections, like a termite inspection. And then each step of the process is going to have to be inspected. Those loans do take longer, but with the interest rate being lower and all the other stuff that's required, those loans are very popular because of that reason. You could be looking at very low payments and getting a much higher loan amount, much higher much more stuff included into your loan. And at the end of the day, honestly, if I'm picking out which loan I want to do, it's gonna be one of those right there. If I'm buying a house, that's how I'm doing it. Lots of different loans amount. Each one's for someone different. Each one is for different situations. If you have questions, ask your salesperson or just put it in the comments. I'd be glad to cover it. Maybe I'll put it into my next video.